what is going on with GBTC at this point in time? Do you have a good understanding of that? And can you help contextualize what this transition is where people are essentially selling out of it? Is that just because the trade of the arbitrage opportunity has completely closed and now people would rather move that into ETFs? Or is there some bigger sort of underlying trend going on?
I could answer this question and probably talk for about 30 minutes straight. I'll try to keep it shorter than that.
That's why you're here, James. I've been listening to your podcast for like 72 hours nonstop. You don't know this, but I've heard you talk about this a lot. Let's go.
It's complicated, right? So part of it is what you just talked about. That discount has collapsed. So there was a lot of people that were simply buying GBTC, getting exposure to Bitcoin because they didn't give a shit about the price of Bitcoin. They were playing that discount, right? So that discount is gone. They're unloading. I have a note that came out this morning talking about some of the sellers. Obviously, FTX is probably a huge chunk of the selling. I have my beliefs that DCG is also a huge chunk of the selling. They are the largest known holder of GBTC, and we know they've had issues with Genesis and their bankruptcy. And just overall, like you look at the futures market, that has seen a massive drop off in open interest. So you can view that essentially as outflows as well. People are unloading ever since the ETF approval came. So people were loaded up going into the ETF approval and they're unwinding their trade. That's what's happening here. The other thing is ETFs still, even with these $3.4 something billion outflows we've seen from GBTC as through yesterday's trading, we're still net positive on Bitcoin ETFs in the US, right? There's still money coming in. So I feel like people are like, oh, the ETFs are taking money. How can the price go down? And it's like, guys, the ETFs are a big slice of the market, but they are not the market. They are a slice of the market. Same goes for futures, which again, they are a big slice of the market, but they are not the market. So I think there's a lot of people selling because of that. There's also a lot of trading happening right now. A lot of the newer ETFs, we call them the newborn 9, they were trading at a slight premium. GBTC, even after converting, was trading at a slight discount. Nothing compared to the 50% we were seeing. It is within a percent. It's near zero right now. We call that band where a given ETF trades from a premium to discount, the arbitrage band, because there's some level of friction in the underlying market or the way the underlying market works where these APs, these market makers, there's Wall Streets, there's things they have to do that cost money. There are transaction costs. There's all these other things. And the more friction in the underlying market or the more friction in the underlying market transitioning to the ETF itself, that wider that band can be, the wider the premium can be, the wider the discount can be. But again, in most cases, that stays within a percent, usually within a few basis points, particularly if you're trading like US equities or something that's trading at the same time as the ETFs. Yeah, things are trading very tight. The spreads are obscenely tight. The discounts are near zero and premiums are getting near zero. Everything from like an ETF perspective is looking exceptionally good from my point of view. But obviously I see what's happening to the price. I'm not blind, but like from an ETF perspective, this has been a huge win from my point of view.
And real quick, I should note, James, and I'll throw to Nick in a second, but you've been pretty sober about your expectations when it comes to these ETFs. You've kind of called people out for almost having a moon boy mentality, if you will, on what their expectations were. So you think things are going really well here about 10 business days into these things trading?
The one thing I would point out is the last chart you just showed. GBTC had its largest outflow day ever yesterday, 640 million, 640. So it's not slowing down. It's honestly picking up. Like that's the biggest outflow we've seen. The other ETFs are holding their own, right? Like that's impressive on its own. Those ETFs, so IBIT and FBTC are two of the fastest ETFs in history to reach $1 billion. They did it in 4 and 5 days. There's only 3 ETFs who have done it faster than 4 days. And one of them is BITO, the Bitcoin futures ETFs. They're smashing records left and right. The one thing I will say, people were like, no one was talking about this overhang of GBTC. I mean, one, I don't expect everyone to read my notes on the terminal, but I have been talking about this for a long time. Particularly, I talked about how the 1.5% fee was like kind of might make the outflows even worse from GBTC. But yeah, we've been looking at this unlocking of these GBTC Bitcoin that has been sat there forever, 600,000+. And this unlocking was arguably, without these other ETFs coming to market, was going to be a de facto bear. Like if the other ETFs didn't get approved and GBTC was the only one that was allowed to convert, I would have considered that a de facto sell the news, super bearish event. I'm technically not allowed to talk about prices or what I think prices are going to do, but I am covering like what we're viewing and trying to understand what's going on in these markets. And you can kind of infer like what I'm thinking based on this data that I'm putting out for the most part.
So is the target for GBTC to go to zero in terms of net asset? Who's going to buy GBTC when you do have the options of ETFs at this point in time? Also, how the hell is the creator essentially of GBTC, like how do they own such a significant portion of this? I didn't even realize that that's the case. That just feels like a massive conflict of interest here.
They've been locked into holding GBTC shares. So one, they didn't want to sell at a discount, even if they could. And Rule 144, because of the way that these trusts came to market, if you are I forget the technical term, but if you're like an associated party with the underlying trust, you can't sell more than a certain percentage of the volume or a certain percentage of the outstanding shares on a quarterly basis. So DCG was basically locked into holding the shares. So one, they held shares because they did that buyback program to try and help prop up the discount in 2021 or whenever it was. So they had a lot of shares then. They also took delivery of a lot of shares via Genesis. So Genesis allowed people to put GBTC shares up as collateral for a lot of their trading, their leverage, what you name it. And DCG basically ended up taking on all those shares. Remember that whole, like, they gave them a loan and they took delivery of their shares. So DCG actually had double this. They had like 70 plus million shares of GBTC at one point. Some of that went to Gemini in the earn situation. My view is I think Gemini likely sold that huge chunk, but they still had over 5% of the shares outstanding of GBTC. But you got to realize everyone's like, oh, DCG is Grayscale is dumping. One, it's not really the case. It's just people are selling the ETF. They're not dumping. They're just facilitating the actual trust, right? So it's market participants that are dumping the shares. But in the case of DCG, technically, I believe they are likely dumping a chunk of their shares, but they have to. They need the capital. There's all these issues with Genesis, DCGs, and a lot of other issues. They need the money. So it would not be surprising to me to find out when we do get another annual report out of the Grayscale's GBTC, whenever it comes out, or a 10Q, whatever, to find out that DCG has completely cut or dropped almost all of it. But that's the efficiency of the ETF wrapper. All these outflows, if we were still GBTC and money and the shares were being sold, we'd be looking at 50% discounts again. The benefit here is that the ETF wrapper that allows that creation redemption at NAV is keeping this thing super tight and trading in line with price. And then they're selling the Bitcoin on the open market. So yeah, it's causing the price to collapse, but the alternative would be there would be selling and you'd have a huge dislocation in the GBTC price and discount. I think that was the question you asked, but
question is, how do you determine how much or come up with any estimate of selling pressure that we anticipate outside of the day-to-day traders that are participating in the market? The pool that you just said of the number of shares and the amount of Bitcoin that's in there, it's like a massive amount. And so selling billions and billions of dollars of Bitcoin is inevitably going to have a negative impact on the price action. But I'm just curious how much further the bleeding gets associated with this.
My initial guess before I even saw the 1.5% fee was I thought like we'd see 10 to 25% of GBTC leave, maybe a third of the assets over the longer term. I will admit that it has been slightly more aggressive than I thought, but you got to realize all those reasons I just talked about why people are leaving. There's also people leaving because the 1.5% fee. And if you're in a tax advantage account like an IRA, which I know for a fact a lot of people that follow me, that's what they were using GBTC for, right? They were buying, if they were buying Bitcoin, they were buying it on their Coinbase accounts or their Gemini accounts or Kraken, whatever, FTX. They were buying it directly, but for their IRA, they were like, I want exposure to my IRA. And everyone was using GBTC or ETHE from Grayscale. So they don't have to worry about it being tax locked, right? Yeah. So because they're in a tax advantage account, they can sell without having to deal with capital gains. So undoubtedly, a chunk of the money is from people that did exactly that. That said, there are a lot of people that are trapped in this thing because you have to basically do the math between would I rather sit in this thing and lose 1.5% a year, or would I rather just sell now and pay a 15% or 20% long-term capital gains rate, or possibly short-term cap gain rate, depending on when you bought it. That's something that people have to decide on what they're going to do. So I'm not a tax professional, seek tax advice, what have you, not financial advice. The other part of it is you asked about like who would use this. You got to realize this thing is way more liquid. The spreads are tighter and it trades better than pretty much any other Bitcoin ETF right now. Now it's not at the level of something like a S&P 500 ETF like SPY or some other ETFs that we refer to as pseudo futures. They basically become so liquid that they are more liquid than even many derivatives. But GBTC is the most liquid product on the market still, and they're trying to use that to build up their market, to hold up their market share. Personally, I think 1.5% was a little aggressive. I thought they could have gone under 1 and it would have been a little better, but they stuck with 1.5. You got to realize their math here is right. They were charging 2%. If they wanted to come in and compete with everyone, even if we exclude the waivers, which they're down to 0% expense ratio and many of these other things, they would have had to cut their fee by 90%. So their revenue is being cut by 90% if they want to compete at the 20 bips level. So their math was probably like, we'll just go to 1.5% and hopefully that the offset in outflows that we see does not correlate to 90% decrease in revenue, right? So that's probably the math they were doing. But the other part is you got to realize that 1.5% fee, if you're trading this thing just for, if you're a market maker, just as a hedge against these other ETFs or whatever, you're making markets in Bitcoin itself or these funds, if you can do this at a spread of like 1 bip, 0.01% of the bid-ask spread or 0.02, that's what we've seen GBTC trading at. I've seen IBIT get as low as 0.08, 0.07. So that's pretty damn good. Very, very good for a new ETF. But if you're trading over like a 2-day period, that 1.5% fee does not matter because the way the fee works is like it comes out. Basically, you could think it out as like them taking a chunk of the assets, 1/365th, like one for every day of the year, and they take a little bit of that fee out. So like if you're trading super short term, you couldn't care less what the expense ratio is. That's why a lot of these leverage ETFs have high expense ratios because for the most part, people are using them to trade. So like they're going in and out. So the longer you hold, the more impactful that expense ratio is. The shorter you hold, the more more impactful the transaction costs are. So if you can get it out because it's very liquid and you can do it anonymously and the spreads are very tight, that's going to be more valuable to you as a short-term trader than something like buying one of these other ETFs that's way more valuable as a long-term buy and hold. And this is something we see across the ETF industry constantly. People who have built up liquidity, embedded assets, embedded use cases don't really have to cut fees to compete with others because the traders always go back to that one. So it's yet to be seen if GBTC can actually hold that wall and defend that turf, but that's basically what's going on here.
Sorry, that fee is daily?
So no. The fee is 1.5%, but the way to think about that, the way I describe it is like, I like to use a termite analogy. So if you think about your assets, you put in $10,000 into a fund and the fee is 1% or whatever it is. You can think of the bigger the fee, the bigger the termite. And the termite just takes a bite every single day. They just take a little tiny bite out of it. That's the way most ETFs work. GBTC worked in arrears. I think it was like taking a bite every month, but it's correspondent to the actual expense ratio of the fund. So if the fund is 1.5%, it's 1.5% divided by 365 that's coming out of the fund every day.
But when do they charge you?
They don't charge you. They take money out of the fund.
On the transact?
No. Basically, they would take Bitcoin out of the fund every single day. So they take a certain number of Bitcoin, whatever 1.5% divided by the daily number is, that's what they take it out. This is the way ETFs work. So GBTC, before it converted to ETF, I think they took that fee out like every week or month. It might have been a monthly thing. So if you watch like how much does one share of GBTC equal to how many Bitcoins, like 0.000 whatever, that number like every month or two like slowly dropped like very minusculely because it's such a small number. But you got to realize the other thing with that termite, that bigger the termite, the way less wood you have left at the end of the day, right? Money compounds if you can keep earning it, but so do fees. So fees can really eat away at your returns.
The Bitcoin or the underlying asset is the wood, the termite is the fee, and the termite is chopping away at the wood. You have to think that that fee structure has to do with the fact that Grayscale's had this shit show situation over a year, Genesis and with Gemini Earn and everything that they've had to deal with. They're probably trying to take advantage of the fact that you pointed out that some people are going to have to make the tough decision that if they're not in a tax advantaged account, if they liquidate their GBTC, they're going to have to pay those taxes. So like you said, some people are going to stay, but it seems like it's a no-brainer if you're in a tax advantaged account to get out of it. James, are the Grayscale outflows, is that the most significant story in the ETF ecosystem, the Bitcoin ETF ecosystem right now? Or is there something else that people aren't really paying attention to?
I'm waiting to see when options are eventually approved. So usually for a typical ETF, for the most part, you can just add options. But same reason that these ETFs had to go through that 19b-4 process where everyone was following those delays, denials, approvals, that's unique to 1933 Act funds, which these Bitcoin ETFs are. So they need to go through the same process to get options. So I'm watching that. I think the GBTC outflows are obviously like the headline item, but again, I'm going to keep repeating, we still have seen over $1 billion net inflows into these ETFs since they launched. So the ETFs are not the cause of the dumping price because on a net basis, they have taken in more money than they've lost. Now that can change if GBTC outflows continue dropping and the newborn 9 ETFs do not pick up their inflow to offset that. But for right now, there are net inflows. So that's what I'm watching. The number one thing that most people care about is assets and flows. Flows are organic demand, right? That is money coming into the fund. You can see exactly what's going on there. Assets will increase or decrease both with flows and with price appreciation or depreciation. So watching assets is important. But the one thing that I keep hearing, both people that are crypto bulls and crypto bears who just hate the entire thing, they're like, people are talking about volume and like, who cares about volume? They don't know anything about ETFs because volume is like how you're going to get the big fish. You can throw this in the water, but if you don't have the right bait, the right lure, like you're not going to get the big fish. And in this case, without volume, there's no chum in the water. So the volumes that we've seen on GBTC and these other ETFs, IBIT, FBTC, BitW, ARCB, all of them, they are very healthy volumes. Even the ones that are like arguably losing this race are having very successful volume days. Now, some of that is like it's feeding off each other. Like I talked about those premiums and discounts. A lot of it is just trading back and forth and arbing the different portfolio, the different ETFs. But that's something that people, I don't think there's a continual discounting of that value. So those are the things we're watching. And I guess that's really it. I can't think of anything else. For the most part, people are covering it. A lot of people were all over the FTX stuff yesterday. I was planning to cover this, but I didn't want to like spook anyone or make things seem crazy. But it was shocking me how few people knew that FTX was likely selling this thing. To me, that was like a foregone conclusion when we found out that the estate had $900 million or whatever of GBTC back in November. So I just always assumed they were going to be a net seller, which is part of the reason why I thought there was going to be a lot of selling in GBTC, because it's not even just them. There's probably a lot of other like bankruptcies and a lot of other people that were just holding on to GBTC and were like, I need to get rid of this thing, but I'm not going to do it until the discount's gone.